When I started out in raising venture capital, I had no network, no brand, no cachet. I wasn't from Stanford, Harvard, or MIT, and I lived in New York. This was back in 2011 when the venture space in New York wasn't even that developed yet. Yet, I was able to raise our Series B from Andreessen Horowitz, our Series A from Jackson Square Ventures, and our seed investors included the Launch Fund by Jason Calacanis, Founder Collective, 500 Startups, and many other notable angels. Now that I'm an angel investor, I get to sit on the other side of the table and I sit in on countless pitch meetings. In this video, I'm gonna walk you through the 6 slides that you absolutely need to have in your startup pitch deck, and I'm gonna explain why. Intro. What's up, everybody? Welcome to Unstoppable. I'm TK, author of the book, How to Punch the Sunday Jitters in the Face, entrepreneur and angel investor. On this channel, I help startup founders, business owners, and entrepreneurs become unstoppable in their life and their business. I drop a video like this every single Sunday with the TK energy, so be sure to hit the subscribe button and the bell icon so you get notified when I drop an episode. In this video, I'm gonna walk you through the 6 slides you absolutely must have in your startup pitch deck, but I'm gonna approach this slightly differently. I'm gonna approach this in first highlighting the inner narrative that's going on inside an investor's head as you go into a pitch meeting. And then I'm gonna show you which slide to use to actually meet that narrative so that you can get to the next stage of fundraising. If you're excited about digging in, go ahead and smash the like button. It helps us out, and let's get started. So you're going into this pitch meeting and you're really nervous, and the investor is probably on their 10th pitch meeting of the day. It's the afternoon and you go into this meeting and it's super scary and you're like trying to fidget with the projector. We've all been there as startup founders. Now, we as startup founders are so enamored in our pitch and proving that we believe in this and this is a thing and they should invest, we forget exactly what's going on in the inner narrative of the investor as they're walking into that meeting. So I'm gonna walk you through the 6 slides that you need to have, but I'm always gonna start with the narrative that's going on inside the investor's head. So as you walk into the pitch meeting, the first thing is what I call the hey phase, the hey ... phase. And in this part of the pitch meeting, the investor is just trying to get in the zone. Now, I've been in countless pitch meetings where the investor hasn't read the pre-read deck that I sent over. And that's okay. They're busy people, you're busy, and they really want to have this meeting and they want to understand what you're working on. But before they get into any of that, they're kind of wondering, well, why are we meeting again? Who are you again? What do you do? And do I even care? This is one of those scenarios where it's always good to get a warm introduction to the investor, ideally from an angel investor. I did a whole episode on how to actually get the right angel investor. You can check that out here or here. I'll also link to it below so you can keep watching this video and check it out after this video. The first slide that you actually need to do as you're getting acquainted is remind them how you were introduced, who you are, and then quickly jump into as succinct of a definition of the problem and the solution that you're looking to solve, with a hint of the vision that you're going after. This is what we call your one-line hook. For me at ToutApp, it was email for salespeople. It was sales productivity or sales engagement. It immediately got the one-line hook on this is for salespeople, and we actually increased their productivity and we are in the email space. If I was walking into an investor meeting and they didn't know anything about enterprise sales, I tried to not do those meetings because I couldn't explain all of those things. That sets the stage right up front on exactly the space you're in, and it really tunes in the investor on whether they really care or not. And you almost want to get to that up front as soon as possible, because if they're not in the space, if they don't understand the intricacies of the space that you're in, they're probably not going to invest. What you also want to do in this slide is, along with the problem and solution, you want to give just a hint of vision. You don't want to give the full vision. You don't want to say we're going to disrupt with AI all of MarTech, because then the bullshit meter will go off and you haven't earned the trust yet. So you only want to give a hint of the vision along with the problem and the solution that you're going after. That's slide number 1. That's as you get acquainted and then get into the first slide. That's after your logo slide, of course. Once you actually set the stage and define the problem and the solution, the first set of things that go through the investor's mind is, well, why do you care about this, you as the founder? Why are you and your team uniquely equipped to actually go after this? And do you actually know enough about this, and why now? As soon as you state the problem and the potential solution that you're working on, they're starting to wonder, well, is this true? Is this real? And why are you the person to do it? Which is why the second slide almost always has to be the story of you and your founding team and the big macro trend that validates the problem you're talking about. Now, let's just say the problem is salespeople waste a lot of time with email and phone calls, and they have to do 8 touches to convert a lead to an opportunity. That's the problem space we dealt with at ToutApp. How do I validate this, and how do I show that I have a story that actually goes into solving this kind of problem? So I quickly almost always jumped into a story of how I got started in this problem space and the big macro trend I think about all day, all night. We had 2 macro trends. One was it takes 8 touches to convert a lead to an opportunity. And the other macro trend was 80% of a salesperson's time went towards data entry. As I painted the story of who I am, who the people are in the team, and as I started to highlight the big macro trend that we are really passionate about and why, it goes into validating what you laid out in the prior slide, which is the problem and the solution and the one-line hook. You start to build the credibility with the investor at that point, and they start to move away from like the why you, because they start to hear about your origin story. They start to understand that there's a big macro trend that's somewhat vetted, that they can start to at least say, okay, suppose I agree with that, what have you got for me? As you start to describe the problem and the solution and why you're so passionate about it, and you have this origin story of why you got into this and why you care about this, and how you have this team around you that really understands this problem you're going after, and there's a macro trend that validates that this is a real problem to go after, the next thing the investor starts to wonder about is this for a real stage? They're asking themselves, okay, you're saying these things, but are you legit? Do you have a real solution, and do others agree with you? They're starting to wonder, like, is this like a vaporware pitch where you're pitching some sort of pie in the sky dream and you don't quite have anything? Or do you actually have actual traction, actual numbers, and actual product? Which is why the third slide almost always goes into some sort of traction numbers and leading into an actual demo of the product. The traction numbers show that you actually have a product in the market, and in addition to the macro trends that exist, there are also actual human beings that are saying, yep, this is a real problem, I want the solution, and I want to use this product. And from there, if you dovetail into a screenshot of your product and then into a real demo, you start to build more and more and more credibility with the investor in saying, look, I understand the problem, I understand the macro trends, we have a solution, and we're starting to see traction in that solution. And here's what we've got so far. Let me show you what the product looks like. As you navigate out of the, is this real? Are you legit stage? Then you get into the show me the money stage. In this case, they're saying, okay, you've got a product, it's cool, you've got some traction, it's cool. Who is the buyer? Who is your ideal customer profile? How do you actually get leads? How do you get users? How do you even make money, and how big can this get? These are the big things that I'm thinking in my head. Once I sort of agree with the problem you're talking about, I sort of agree that, okay, maybe you're the right person to go solve this problem and you've got the right team around you. And I sort of agree that, okay, the product's pretty good, it's got some rough edges, it's got some ways to go, but man, there's some good bones to it. But how does this turn into a real business? Which is when you go into your business model slide. The business model slide ideally attacks 3 key things. The first thing it attacks is your TAM. You want to start to identify, like, look, we are targeting this specific group of people. This is our ideal customer. And in our ideal customer, this is the overall total addressable market that exists with all the people that are servicing it right now. In terms of the people that we actually have in our product right now, here's who our ideal customer profile really is right now. And here's how we're getting them to sign up. Here's our go-to-market. Maybe we have a sales team. Maybe we have a self-service model. Maybe we're ad-driven. Maybe we're totally organic. This is one of those cases where you never want to say we spend $0 on marketing. What you want to say is, here's the specific group of people we're going after. Here's how big that market is. And here's how we make money. Here's how we charge for our product. Here's how we monetize our product. And here's how we're actually thinking about the whole thing. When you start to put the product and then you start to add the business model, all these little objections that go through the investor's mind on, are you legit? Are you the right person? Is this a real problem? And how do you actually make money? Starts to get addressed almost preemptively and in a very beautiful way. Once you get through these 4 slides, then you start to really dig in, because investors are like, okay, they've got actual traction. They've thought about how to go to these people and attract these people and get them into the product. They've got an actual product. This person, this team has some story behind why they really care about this. They have some domain knowledge, and there's a big macro trend and there's a big market. I'm interested. So let me pause here just for 1 second. That's 4 slides out of the 6 slides that I'm going to show you. And there's a subtle difference in the approach here, and I want to make sure that I highlight it. Every single one of these slides actually goes up against the common objections that an investor has. It aligns with the inner narrative that is going through an investor as they walk into a pitch meeting. It's very different than trying to pitch some big crazy idea and showing conviction and saying it's going to work and saying there's gumption and please invest in me and please tell me this is a good idea. It's a very different approach, and the entrepreneurs that learn this tend to get better at fundraising. There was a distinct before and after moment in my own fundraising journey. When I was an entrepreneur, like if you think about Baby TK used to go into these pitch meetings and used to talk about the product and the vision and all these things we're gonna do and the little traction that we have, almost in a way of looking at the VC and looking at the investor and saying, hey, do you think this is a good idea? Like almost seeking validation, as if the investor kind of knows whether this is gonna be a good idea or not. In the after, once I went through enough pitch meetings where it didn't work or worked a little bit and I got coached and I learned, there was this after. And the after is when I realized every pitch meeting is a meeting where you're trying to find alignment. You're trying to actually say, here is what we believe, here is why we believe that, here's why we really care about this, and here is what the opportunity is. And what you're looking to do in the pitch meeting is to find alignment between the investor's worldview and your worldview. There's very little convincing that really goes on here. What's really happening is the investor is trying to play out in their head their inner narrative on, is this a real business that I believe in? And you're walking through your belief on why this is a business that you really believe in. Are you starting to see the difference in approach in this? This is not about pitching some grandiose vision and some pie in the sky thing. This is about really telling your thesis around your business. Ray Dalio at Bridgewater, he's one of the most famed investors. I used to actually work at Bridgewater, so I got to see him almost like at a 10-foot view. Ray Dalio always said, our job as entrepreneurs is to bet against the consensus and be right. And truer words have never ever been said about startup founders. What we are really doing is we're saying we have a thesis. And this thesis is almost a little bit of a secret. It's betting against the consensus, because the consensus says to do this, and I'm gonna go do this. And if I am right, and if you join me on this, and if we are both right, then we're gonna get paid handsomely for it, because we end up being right by betting against the consensus. That's how it works in the investment management business, whether you're a venture capitalist or a hedge fund manager or a PE manager. And that's how it works for entrepreneurs and startup founders like us. This is why it is so important that you follow this type of narrative where you're purely pitching your thesis around the business and your conviction around the business and your story around the business, and you build on it one slide after another. And when you're able to do that, when you're starting to start with the problem and the solution, and then you go into the macro trend and the story on what uniquely qualifies you and your team. And then you go into the actual traction and the product and the numbers. And then you show how you're gonna make money. You're walking through your bet against the consensus and why you think you're right and what the early signs are. And that's when real conviction comes. And that's when this real centeredness comes in a pitch meeting. And that's when you're meeting the narrative of what the investor is already thinking, and that's where you're starting to get aligned. If you're starting to see the difference in approach here, if you're starting to see the aha moment that I had in the before and the after, can I just get a yes in the comments below? It would mean a lot to me and my team, and also just helps me know that you're with me here. So going off the last slide that we talked about, as they exit the show me the money zone, where they're starting to see, okay, these people know how to go after leads and users, and they know how they're gonna make money. And this can get pretty big given the TAM, the total addressable market that they're talking about, and the ideal customer profile that they've defined. By the way, if you wanna learn how to create an ideal customer profile, I did 3 videos on this. I'll link to them below. One is about how to create an ideal customer profile. The other is how to implement an ideal customer profile. So be sure to check those out after this video. Once they actually exit out this show me the money phase, then they start to go into their own heads. They start to actually check in with their own business model. And this is one of the things that a lot of startup founders, especially when you're starting out, I didn't realize this, or I didn't think about this. I didn't think about the VC's business model. VCs are money managers. They are here to deploy capital, and they have their own business model, just like how you have your business model, which is why making money, getting to an exit is super important for them. And this is when the VC starts to think about, or the investor starts to think about, like, look, I get it, you have an idea here, but in their own mind, they're thinking, I need to return 3x my fund. How big can this business get? How big can this business get? And will your business be the one that actually ends up being the one company that really returns my fund? The thing about venture capital is it's got a very high failure rate, and it's supposed to be like that. Their jobs are to deploy capital into things that are betting against the consensus. And most of those things are going to be wrong. But their job is to make sure that every single thing that they invest in has the chance of actually being right. And being so right and being so big that it returns 3x to 10x their fund. So if they've got a $10 million fund, they need to make sure that you get a certain outcome. If they've got an $8 billion fund, they need to make sure they show a certain outcome. And this is the point in the pitch where it has nothing to do with you, really. They're in their own head thinking, is this company alone going to return my fund? And this is where your vision comes in. This is where you show your slide around how you will compete and win. This is a slide where you can show the landscape that you're in. You can show your competitors, and you can really start to outline, this is what our competitive bet is. This is how we're betting against the consensus, which is all these competitors. And this is how we're going to attack it completely differently. And this is how, beyond what you saw in the product today, this is how we're going to grow, and this is what it can ultimately become, which in a way is really going to answer their question of how big can this really get? So when you actually show your vision, which you hinted at in the beginning, but really dive into it and say, look, if this works and this works and this works, we can go get this, and we displace all these other competitors, go after this total TAM, and that's how I think we're betting against the consensus. That's when they're going to start to do the math in their head and say, okay, if this is the vision and this is how they're going to compete and this is their origin story, maybe this can actually return my fund. And that's when the investor or the VC starts to kind of lean in and say, tell me more. So up to this point in the meeting, you start with acquaintances and you start to speak to their narrative. You're doing it differently, right? And you're starting to say, well, I'm betting against the consensus, and here's why we think we're right. Here's the problem and solution we're going after in our one-line hook with a hint of vision. Here is the story of us and why we care about this, and the big macro trend that makes us believe that this is a real problem to go after. And here is the traction that we have, and here's the demo of our product. And here is the big total addressable market we're going after and the ideal customer that we're starting with. And here's our go-to-market motion, and here's how we're making money. And here is the big vision. As we prove out these things and go bigger and bigger and bigger, we can go after this really big thing, and here's how we're gonna compete. This is when you're starting to really align if you're with the right investor. And that's when this next part of the narrative comes in. The investor then says, all right, if I say yes, and this is the thing that a lot of startup founders don't think about. They're starting to play in their mind, if I say yes, let's just say I put in $500,000, or I put in $1 million, I put in $3 million, whatever that check size is. If I say yes to this round, let's just say I'm in, a bunch of other really smart people are in, awesome, great. Now they're asking, all right, let's just say you raise $3 million. How are you going to put that capital to work? And what does the next fundraise look like? And here's the thing that I also didn't think about as a startup founder early on, the baby TK didn't think about, which is if I raise this round, the investor is not just thinking about what happens in this round, they're thinking, will I be able to raise the following round? Because if I raise this round and then I'm not able to really change the trajectory of the business, then I'm not gonna be able to raise that next round. I'm not gonna be able to execute on the bigger vision, which is gonna go return the fund for that investor that you're pitching. So they're starting to do this math on, all right, if this round is at this valuation, and the next round will have to be at this valuation, Will my money and whoever else is putting in money, will you guys actually be able to put in that money to work so that you can get to that next stage? And that next stage could be the next round of funding, or it could be profitability, but really it's probably the next round of funding so that you can go after that bigger vision, which is starting to convince me that it's gonna help me return my fund, which is why you wanna, at this point, go into your financials. You wanna be able to lay out your financial model that shows, all right, if we raise this amount, which is what we're raising, and we're raising only what we need to raise, if we raise this amount, here's where we are right now, here's how we're gonna deploy that cash, and here's how it's gonna get us to this next stage. And when we get to that next stage, here's what the company is gonna look like, here's where we are gonna be in our vision, and based on that, we'll be able to raise our next round. And that will answer the question in the investor's mind, like, look, if I say yes to this round, will you actually be able to continue on and raise the next round and increase the valuation of the company, which will then allow me to go back to my LPs and say, hey, I invested in this company, we invested at this valuation, they're at this valuation now, we're pretty awesome, we're raising our next round. Which is kind of interesting because all of a sudden, this has very little to do with your company, but it really has to do with the business model of the investor, which startup founders don't think about. And then finally, as you've navigated this conversation, they'll probably dig in more, they'll ask more questions, they'll ask more thoughtful questions, and they'll start to really stress test you on how you're thinking about the business. The one thing that you want to be ready on is being able to say, we don't know that, but we'll get back to you. What that means is you'll have to know all your stats. You'll have to know the inner workings of your business. You'll have to be able to demonstrate that you've thought about this company, this macro trend, and this bet you're making against the consensus, which includes the competitive dynamics and the technology issues that may come up. You've thought about all this and you can speak to it with conviction. But at the same time, you are also centered enough to be able to say, you know what? I don't know the answer to that, but I'm gonna get back to you. I remember when I was in my pitch meeting for my Series B round, and it was one of the most humbling things because by the time we were at Series B and we were pitching investors, I had spent years thinking about ToutApp. I had spent years thinking about salespeople and our software and the vision and where we could go. And it was one of the most humbling things because I was in a room with Mark Andreessen, Ben Horowitz, the entire partnership of Andreessen Horowitz. And we spent the first 30 minutes going through slides very similar to this. And there was this moment where I'll never forget this. Mark Andreessen just said, okay, got it. And the okay, got it meant he had computed my entire business and the ecosystem in his mind in the time that we spent so far. And then they started to pepper me with questions that were so deep. I was like, how are you already thinking about this? I can't believe, because I've been thinking about this for years and I've thought about it deeply and I've thought about it, but in 30 minutes, you've calculated that in your head. That's what great investors do. They build up a mental model about your business as you walk through these slides. They think about their own business model and then they enter into a phase of stress testing you. So you also want to be prepared to have a bunch of appendix slides that go into different scenarios of different aspects of your business so that you can be stress tested and you can show that you've thought deeply about the business. Once you go through these slides, it will hopefully get you into a more engaging discussion, the next meeting, and a more engaging next step so that you can continue the fundraising process. But there's one last bonus slide I have for you. Inevitably, the investor will say at the end, no matter what, whether they're interested or not, they'll probably have to go talk and think about it a little bit more. They'll say the dreaded term that we all just love as startup founders. They'll ask you, how can I be helpful? With a nice smirk. And it's like, you write me a check, that's how you can be helpful. I know that's the answer you're thinking in your head. But here's the slide I want you to have ready. I want you to have this one slide ready, and it has made the biggest difference in my fundraising and other startup founders that have used it. I want you to have a slide with ideal portfolio companies that are in their portfolio that are in your ideal customer profile. I did this and it's almost always just a bombshell. As soon as they say, how can I be helpful? You want to pull up a slide that says, you know what? You invested in these 5 companies. Here are their logos. These companies are totally in our ideal customer profile and we believe we can help them. It would mean the world to us. It would be very helpful to us if you introduced us to their CEO or to their head of sales or to their head of marketing or whoever you're selling to. When you drop a slide like this, it shows 2 things. 1, it shows conviction around your product. And 2, it shows that you've really thought about this. It shows that you are honed in on your ideal customer profile. And it shows that you have enough conviction to say, put me in a sales process. I will add value to your portfolio companies. And by the way, if there are a set of portfolio companies that they've invested in that are already customers, add those logos in there and say they're already a customer and you can go talk to them about us. But we would really love intros to these 3 or 4 other companies. So to recap, here are the 6 slides that you have to go through. Number 1, problem, solution, and your one-line hook with a hint of vision. You don't want to put the whole vision up front because you don't have the trust yet, and the vision is probably like a bigger consensus, bigger bet against the consensus. Number 2, you want to build on that and share your story, why you care about this, and the macro trend, all of which validates the problem solution slide. Then you want to get into your traction to show that, yep, we've tested this and there's actual traction, and you want to show your demo. And then you want to show your business model and show your TAM, your ideal customer profile, your go-to-market strategy and how you're making money, which is your business model. And then you want to dive into, all right, and here, if all this works and we raise our round, here's our bigger vision, here's how we're going to compete, here's our bet against the consensus, and here's our world domination strategy. And then you're going to go into the financials, showing if we raise this round, here's how we put the money to work, and here's what the next stage looks like. And once you've done that, you want to drop your bombshell and say, by the way, here are the customers we already have in your portfolio companies, but here are the 3 intros we would love to have because we want to help them do what we do. Now that you have the 6 most important slides that you need to have in your startup pitch deck, I want to leave you on one last note. Fundraising is a difficult process. You can go talk to the entrepreneur and startup founder that have had successful exits and are raising for their 3rd company. Fundraising is still a difficult process for them as well. It's an unnatural process, it's a difficult process, but in the end, it's always worth it. And if you're having trouble navigating this whole process, just remember, the best companies that exist today, some of the best companies that exist today had trouble fundraising in the early days. Mark Benioff, founder of Salesforce. Salesforce is valued at $150 billion today. They could not get any VCs to invest in Mark's company. Mark was not able to convince any VCs to believe in this vision around the cloud, which is insane if you think about it. He had to go to his personal friends and put in his own money to get Salesforce off the ground, and it's a $150 billion company today. If you think about Jeff Bezos, the richest person in the world, Amazon, the giant companies, incredibly successful company, he had to pitch 60 investors to cobble together $1 million of funding at that stage of the company, at the early stage of the company, which is also insane. So the thing you have to remember is it's hard even for the best of us. And on top of that, investors don't decide whether your idea is right or wrong, whether your bet is right or wrong. There's only one group of people that actually decides, and that is your customers. As a startup founder, you have 2 levers that matter the most. You're either shipping code or you're closing deals. Ship code, close deals. You operate those 2 levers properly, and your customers will tell you if you are on the right path and if your bet against the consensus is actually right. And when you do that and you go into these pitch meetings, everything becomes easier. So to summarize, now you have my 6 slides. If you download my 6-point startup strategy guide, I'll link to it below. It includes the template for this. It also includes a lot more information on creating a 1-page strategy for your startup so you can ship code and close deals, which are the 2 levers that matter the most. Additionally, as promised, if you want to go build out your ideal customer profile, be sure to check out this video where I explain the 3 most misunderstood things about building an ideal customer profile. You can also check out this video that helps you create an ideal customer profile. And then you can check out this video that helps you implement an ideal customer profile. Once you have an ideal customer profile, and as you're building your product, what you also need is an unstoppable sales funnel. An unstoppable sales funnel is a specific way that I create a sales funnel that helps you get early customer validation, that helps you rise above the competitive noise and create more pipeline and create more customer conversations for your business. So you can check out this video for learning how to build out an unstoppable sales funnel. If you enjoyed this video, please hit the like button. It would mean the world to me and my team. We put in a lot of effort to take really complicated topics and distill them down into simple note cards so that you can go execute on an unstoppable strategy. It takes a lot of work, and it means the world to us when you like the video. It helps us spread our message. And if you can comment below with your thoughts, that would mean the world to me as well. If you're part of a WhatsApp group or a Slack group or a mailing list with other startup founders that would find value in this video, please share the video with them as well. We want to help as many startup founders as possible to rise above and execute with an unstoppable strategy. And lastly, I drop a video like this every single Sunday with the TK energy to give you clear, actionable steps on how to take your startup to the next stage of growth, how to have a strategy for your personal life as a startup founder and your business. And so be sure to hit the subscribe button and the bell icon so that you get notified when I drop an episode every single Sunday. And lastly, remember, everyone needs a strategy for their life. But when you're with us, yours is gonna be unstoppable. I'm TK, and I'll see you next Sunday.